Money FM 89.3, the best of the afternoon update. The afternoon update with Lin Li Fu.
Money FM 89.3, it's Lin Li with you. Lots happening today in the markets, all tied to U.S. President Donald Trump's new trade tariffs and swirling geopolitical tensions. You know what else is triggered by President Trump's tariffs and the geopolitical developments that we're seeing? Gold buying patterns. In recent days, investors in Asia apparently have hit the pause button on purchasing gold, at least according to reports. Instead, they have started pawning family heirlooms and golden treasures they've stashed away to cash in on record high prices. We are talking about gold today, one of the oldest and most trusted stores of value. The World Gold Council recently said central banks, significant holders of gold, reported 18 tons of net purchases at the start of 2025. The sustained buying highlights the strategic importance of gold in official reserves, particularly as central banks navigate heightened geopolitical risks. How is gold demand evolving in key markets like Southeast Asia, China, India, and Japan? What do we need to know about regional trends? My guest today is Shaokai Fan, head of Asia Pacific and global head of central banks at the World Gold Council. A very warm welcome to you, Shaokai, and thank you for joining me in the studio today.
Thank you for having me.
Now, Asia traditionally accounts for a majority of the global demand for gold, and a substantial portion of that is bought as jewelry. So what can you tell us about the overall demand at the moment? And has it been off to a slow start since the beginning of the year, as some news reports have indicated?
So jewelry accounts for roughly 40% of global gold demand, and of course the biggest buyers of gold jewelry are China and India. Last year was an important year for the jewelry market because typically speaking, when the gold price is high, like it was last year, we see jewelry demand dented a little bit because of course it's generally a discretionary good. That was the case in China last year, but in India we actually had quite a resilient jewelry market, and that was because there were some changes to customs and import duties in India, which actually led to a reduction in some gold prices, which meant that the market there was quite strong. For this year, it's a little bit early to say, of course, but we think that jewelry markets are still going to be reacting to stronger gold prices. I expect jewelry sentiment to be dented a little bit. But that being said, although last year was a bit of a testing year for jewelry demand in terms of the amount bought, in gold amount, in the value of jewelry bought, it was actually still quite strong, given the high gold price. So there's a lot of demand for jewelry out there still.
Can you give us an overview of how it has performed, particularly in Southeast Asia?
So Southeast Asia jewelry demand has been a little bit mixed. I think the markets that we track, like Vietnam, Thailand, for instance, they might have seen a bit of a dip, and that's completely in line with how global markets perform. Typically speaking, when gold prices are high, people tend to buy less jewelry. But like I mentioned earlier, one silver lining is that although the amount of jewelry being bought in gold terms was less, the value of it was actually quite consistent, meaning that people still had a lot of appetite to buy gold jewelry.
What's driving all this? You know, as I mentioned earlier, we talked about geopolitical risks a little bit, strength of the dollar, inflation. Can you talk around those factors?
Yeah, lots of different factors going on influencing the gold market. Of course, jewelry is one important segment, but not the only segment of the gold market. You mentioned a lot of the factors that are impacting gold. Let's start unpacking them maybe one by one. The dollar and interest rates, I think, are an important factor. The Fed has started to ease interest rates since last year and will probably continue to ease. And that factor means that it reduces the opportunity cost of holding gold. It actually entices a lot of investors to look at gold because they don't get as much return in other asset classes. So we've seen that as a factor in recent months. A lot of investors moving back into gold because interest rates are lower. And then we look at, let's say, geopolitics, tariffs, Trump. I think the main word to attribute to that is uncertainty. Because there's so much uncertainty in the market right now, gold traditionally is an asset that people turn to during times of uncertainty, instability, etc. And I think it has benefited from some people moving to gold as a result of that, trying to find some refuge during this relatively unstable period.
Okay, unstable as it is, what do you see, the trajectory to be? It's been going higher, right? I think it's come down a little, but do you think it could break through the $3,000 an ounce benchmark, or is it going to have a correction downwards if and when things settle down with Donald Trump and global trade?
Very good question. Probably one of the most important questions. Unfortunately, the World Gold Council does not forecast the gold price. We do have various tools and models where people can kind of figure out what their own views are for gold. That being said, we think that this level of uncertainty combined with potential future interest rate cuts are going to continue to drive a lot of investors to look at gold. So I think that investment demand for gold is still going to be quite resilient. Jewelry demand might be a little bit more dented for the reasons we said before because of the high prices. And the other part of the gold market is, of course, central bank demand, which has been very, very strong. And I think central banks have shown a lot of interest in buying gold, and probably that will continue with all this uncertainty going around too.
Okay, I want to pick up on that. You mentioned rightly that central banks are a big part of things, and you handle that portfolio as well at the World Gold Council. Could you elaborate on why they're buying more gold? I read somewhere that China's central bank, for instance, raised its gold reserve by 5 tons in February, the 4th straight month of expansion. So what's happening here?
Central banks, of course, have been holding gold for centuries, so it's not a new asset for them. But in more recent history, they've been buying gold on a net basis for the last 15 years now, since the financial crisis. But more importantly, the last 3 years have seen extraordinarily high levels of central bank gold buying, basically double the amount that they've traditionally bought on an annual basis. They've been buying now 1,000 tons of gold per year, whereas before they were buying 500 tons or so. Ever since 2022. And I think 2022 is an important reason for why they've been buying gold, because that, of course, was the year that the conflict in Ukraine started. But also because of that conflict, it was also the year that sanctions were placed on the Bank of Russia's foreign exchange reserves. And I think that led to some central banks, maybe not all, but certainly some, thinking about how best to mitigate this political risk in their portfolios. And because gold is not issued by any specific government, and also because it's a physical reserve asset, it can be stored in the home country if necessary. It makes it a relatively attractive alternative for central banks to turn to try to mitigate political risk. So I do think that's one reason that central banks have been buying so much gold in the last 3 years. On top of that, there are other reasons as well. Like I mentioned before, gold is a safe haven asset, and we're living through very uncertain times. So I think that some central banks are turning to gold, wanting to have a little bit more stability and safety in their portfolios too.
Okay, the demand from Asia-Pacific central banks, can you perhaps do a comparison to global trends?
So there's been a lot of buying from APAC central banks, like you said. You mentioned China. They've been one of the larger buyers this year as well. The Reserve Bank of India, I think, is the second or third largest buyer in 2024. In Southeast Asia specifically, the MAS, our own central bank here in Singapore, they've been buying quite a bit of gold in the last 2-3 years. Other central banks in the region have been also strong supporters of gold. The Philippines, Thailand, Cambodia, they've all been buying some gold as well. I would say that the central bank gold buying phenomenon is actually quite widespread, though. It isn't just an APAC phenomenon.
I see.
We've been seeing a lot of buying in Europe, too, probably because of rising tensions between different powers in Europe. And we've seen buying in Africa and Latin America for different reasons, but I think it's quite a widespread phenomenon overall.
Okay, what about institutional demand? What are we seeing in terms of sovereign wealth funds and institutional investors where gold allocations are concerned?
Sovereign wealth funds are a little bit harder to unpack because they're notoriously opaque in their holdings of various assets, in their reporting. So we don't have any specific data on that, but I think anecdotally, we do think that sovereign wealth funds have been showing a lot more interest in gold. The one specific data point I can give you is that the sovereign wealth fund of Azerbaijan, called SOFAZ, is one of the few sovereign wealth funds that discloses what they buy. And they actually said they bought a significant amount of gold last year as well.
That's interesting.
Yeah, certainly good for them to be so transparent about their gold holdings. Apart from sovereign wealth funds, other institutional investors, we think anecdotally again, have been quite strong supporters of gold too, because they typically often use gold ETFs as their preferred vehicle of entering the gold market. And we've seen a lot of inflows into gold ETFs in the past few months.
Okay. On a related note, is there increasing industrial demand for gold? And which industries are we seeing that?
So industrial demand for gold is the smallest part of gold demand. Typically, under 10% of gold is used for industrial purposes. Over the last couple of decades, that's been on a decline as the gold price has risen and people have substituted away from it. But actually last year it was a bit of a bright spot as well because of this boom in AI, requiring a lot more chips and technology that all use gold. We actually saw quite a strong growth in gold as an industrial input over last year. I think that will probably continue to be so, but it's still a relatively small part of the gold market overall.
All right. It's really interesting listening to you and your perspectives on this, but I'd like to know, in what ways is the World Gold Council working with policymakers to ensure a healthy gold market?
Well, many different ways. It's our job, of course, to engage with stakeholders, including policymakers, to grow and improve the gold market. So in various countries in this region, we've been engaging with governments, financial regulators to try to, clarify or make gold more accessible. Mm-hmm. One recent development that I think might be very interesting is that Indonesia announced the gold bullion banking services, gold financial services, to be allowable in Indonesia, which really helps untap very large, potentially very valuable market for gold as well. So that's something that we've been keeping our eye on. We've been trying to give as much input into that process as possible to make sure that there's an opportunity for gold to grow. Other markets like Vietnam, for instance, we've been helping the government there on trying to see if they can introduce more liberalizations into their market, because there's a lot of controls and restrictions around importing gold into Vietnam.
Okay, just for the benefit of our listeners, Shaokai just flew in from New York and he's really, really jet-lagged, but he made it to the studio. I'm so grateful for that. Shaokai, I'd like to touch on digital trends. How is technology shaping the gold market in Asia?
Definitely impacting the gold market overall. Actually, 20 years ago, saw the launches, the first few gold ETFs, and that was already a big breakthrough in how people trade gold. Mm-hmm. Of course, more recently, we've seen the growth of blockchain technologies. Right. Various different types of applications have grown to use gold and make gold more accessible. So I think there's a lot of different ways that investors can access gold through those technologies. But more specifically, the World Gold Council has been trying to work with a lot of solution providers on making gold more adaptable to the 21st century, including making sure that there's an immutable blockchain record of gold holdings from the mine site onwards, so that you can make sure that if you're buying gold, it's come from responsibly sourced mining.
Speaking of mining, sustainability, are sustainability concerns a big focus of, the world you live in, the world of gold?
Absolutely. I think that the entire gold mining industry views ESG very, very importantly. They know that it's something that they need to always stay on top of and address. And I think for the most part, the large mining companies, they understand that the needs for environmental controls, the needs for making sure that they're using the latest technology to extract gold. I think the area where we should be a little bit more focused on for gold extraction is actually artisanal small-scale gold mining, which is often informal, often a little bit more in the gray area. So that's an area that the World Gold Council has been trying to tackle as well, trying to help with more formalization, or at least bringing more attention to this part of the gold market. Central banks are actually playing a very important role in this, because many central banks buy artisanal gold directly from domestic production. And we're working with a group of central banks now, trying to give them as much input and advice as possible on how to make sure they can source this gold responsibly.
Okay. And looking ahead, what are your predictions for gold in this region, in the Asia-Pacific region? I
think the sky's the limit for gold in this region. We have young, developing, fast-growing economies in Southeast Asia, one of the few bright spots in the world for economic growth in the long term, I think. The demographics, but also the market conditions, means that there's a lot of investors who are just coming up the value chain, who are looking for ways to both diversify or maybe also to maintain value of the long run of their hard-earned wealth. So in countries like Vietnam and Indonesia, like I mentioned before, I think there's a lot of potential for gold to be a much more embedded part of personal wealth in those countries.
Okay, I got to try. So before we go, any advice for our listeners in terms of how they should be positioning gold in their portfolios?
Of course, we think that there's room for gold in almost every portfolio, but you need to understand that you shouldn't be turning exclusively to gold. It's not a panacea for all your financial problems. It's one component of a portfolio. And we think that it's obviously an important component, one that can bring a lot of lack of correlation, a lot of diversification to a portfolio. But you should take a look at various tools that we have on our website, goldhub.com. They can help you determine what might be an appropriate allocation based on the other asset classes that you hold too.
All right. Thank you so much for your insights, Shaokai. He is Shaokai Fan, Head of Asia Pacific and Global Head of Central Banks at the World Gold Council. Really appreciate your time today, Shaokai.
Thank you.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.